Hi everyone, welcome back to my YouTube channel Manu Issue ACCA classes. So in this video, we will be learning about person service company and the IR35 regulation. So this video will be more important for the P6 student, and this topic is not included in the F6. It's only relevant for the ATX student. So let's start to the topic, the postal service company. Basically, let's learn how these things, means why this concept has been came and why IR35 regulation has been introduced by HMRC. So suppose if I am working for any company or any individual is working for any company, they will be considered to be the under relation of employee and employer. Where employee will receive a salary from their employer, and on those salary they have to pay income tax as well as NIC, both by employer as well as an employee, right? And any kind of benefit kind also being received from the employer, they do have to pay tax on in NIC on that benefit as well. So overall, what I mean to say is, if individual is working in the firm or in the company, they are considered to be the employee, and they have right to receive the salary and the benefit, but they have to pay tax and NIC both by employer and employee, isn't it right? So now what that individual can do, instead of working in those company or in the firm, what they will do, they will establish a company. Okay. And through that company they are providing services to their employer or other people or other client, right? And that company, that formed by the individual to provide service, is known as a personal service company. So basically, in certain situation, individual might establish a personal service company to receive their income from their client in more tax efficient way. Okay, in more tax efficient way means, like, if I am providing services to the company, obviously the amount I receive from my ex-employer or client or company, it will be shown as income of the company rather than my salary. And you know that the tax rate, corporation tax rate, is lower as comparison to the tax paid on the salary, obviously, right? And what I can do, I can take the money from my company in the form of dividend rather than showing it as salary. So obviously the tax rate on the dividend is also lower, right? So that's why the term more tax efficient way has been mentioned. So instead of being paid a regular salary from the employer, they receive earning through the PSC, personal service company. And the aim is often to save tax by splitting their income between salary and dividend, which can reduce their tax burden, as I said earlier. However, HMRC has introduced IR35 regulation to combat this form of the tax avoidance, when individuals are in effect of working as employee but presenting themselves to provide the services through the company. So what HMRC says that, oh, this individual is forming the company and providing services to their ex-employer and other company and other client. So now they introduce the IR35 regulation. Okay, so now we will come to on later on the IR35 regulation. It's also called anti-avoidance rule. But let's understand what will be the key benefit using the person service company. As I said, on the salary, both employer and employee NIC need to be paid, but providing services through the company, person service company, it will reduce. Again, in dividend are taxed at lower rate than salary, so leading to potential tax saving. However, if company is deemed by HMRC to be a tool for a tax avoiding, specific measures are put in the place to ensure that individual is taxed similarly to the traditional employee. This is where IR35 comes to play. So now HMRC bring the rules IR35, and that says that if they those company the personal service company is providing the services to their ex-employer, or other people or the client, in that case, first of all, we need to identify, means I mean to say that we need to consider whether the company actually exists or not. I mean, whether it have its own independent existence or not. Okay, and for a company to be real entity, it must have its own independent existence. Okay, so and how can how the company will show its independence? Okay, so there are some key factors to indicate that the company is independent and acting independently. First of all, we need to consider whether the company have right to change the worker or not, or send for helper or not. Okay, so if a company is only operating with the one employee, they don't have right to change the worker and send the helper. The obviously it's not independent. Okay, and the company have its own management structure, whether there is a own management in the company or company is running by the one individual who is leading by themselves, putting their roles by themselves. Okay, and bearing the risks of income variability. Obviously, being a company, there might be ups and downs. Okay, so this need to be considered. Controlling work schedule. Being an employer have right to change the timing, work, responsibility. But if those company have such control, then they are independent. If not, they are not independent. So if these conditions are not met, then HMRC may classify individual as employee under IR35. It won't consider it as a company. Okay, and how the tax treatment will be done. So now let's learn about this under IR35. So in IR35, basically it's anti-avoidance rule of the HMRC regarding the new company formed by the individual to provide services as being operating as a person service company, right? And mm, this apply when new company has no business of its own and it's just providing services to their ex-employer or other company as a employment service, right? So we first of all we need to calculate a deemed salary. The deemed salary, that amount received by individual through the company. And how do we calculate that? We need to consider whether the service to whom the company is providing is a small company or it's a large one. Okay, so we need to consider the first that, right? So, if the client to whom the service being provided is a small or medium or large one, then in that case, if the client, I mean to say, if the client is a large one, in that case, the client has to issue SDS. SDS means status determination statement to the individual. Right. So when client issue can just I need to mention the this is for the large company, right? Large company, large or medium company. So this is for a large and medium company. Okay, and what they need to issue, the client need to issue SDS means status determination statement. Okay, and the in that statement the following expenses and costs are deducted to calculate the direct payment. Okay, so let's see. Suppose payment in respect of service that is paid by the those client to the company PSU, right? So we will take those amount. Then we will deduct any direct cost incurred by PSC like material one. We will deduct those as well, and any legitimate employment expense means any employment expense done by the person service company, that also need to be deducted in order to arrive at deemed direct payment. So after all this deduction, we have got deemed salary, and now the on those deemed salary, on those deemed direct payment, employer have to pay NIC, and the individual means those PSU company the PSU company employee, I mean the individual who has established the PSU, they need to pay income tax and their NIC, class 1 employee NIC, right? But if the client to whom the PSU is providing services is a small one, in that case, client receiving services, in that case, I mean, uh, PS, PSC means person service company is responsible for calculation of deemed salary. right? And how it is calculated? First we will take the total receipt of the company, and then we will deduct the statutory deduction at the rate of 5% of total receipt, actual salary paid by the company, then we class 1 employee NIC paid by the company, and then we will come up to then we will also deduct the allowable expense incurred for employee, and then we arrive at a deemed salary including NIC. Okay, and then we will deduct class 1 employee NIC upon deemed salary, right? Then and how we will calculate that? We will take this amount where I have put in number 1, and we will multiply it by 13.8% divide by, because this amount is 113.8%, right? And so we will deduct the class 1 employee NIC on those deemed salary, and then it will be the net deemed salary liable for the income tax in part of the individual, right? Okay, and again, HMRC allows statutory deduction of 5% for the PSC, which we have deducted here to cover, and it will be shown as operational expense. Any remaining profit after this will be deduction. This deduction will subject to corporation tax. It is important to note that dividend paid by the PSC will not be subject to additional tax, because HMRC treat the entire income as salary under IR35 rules. Okay, so this is all about the PSU and IR35. I try my best to simplify it. In case you have still any confusion, doubt, do let me know. You can follow me on the Instagram, Telegram, Facebook, and now I have been started to write these notes on the Quora. You can follow me as there and send me query wherever you feel easy and convenient. So I'm here to help you your doubt. So have a good day and stay tuned for more video like this. Have a good day. Bye.